Let's take a look now at how the markets are performing on this day. The local index is firmer, with its global peers mixed, as investors worry that recovery from the COVID-19 pandemic will slow inflation, leading to the tightening of monetary policy. Mr. Matete Thulare, who is head of foreign exchange execution at Rand Merchant Bank, joins us now to talk us through the latest business stories. A very good afternoon to you. Now, when we take a look at the Rand, it remains flat after breaching the psychologically important 15 Rand against the dollar for the first time in 2 weeks yesterday. What is driving those moves?
Hi, Tammy. Yeah, happy Thursday. And I suppose for the Rand, it's not such a happy Thursday. I mean, obviously we've weakened about 1.6% in the previous session, and I think we are the worst performing emerging market currency against the dollar. And I suppose when you just look at some of the risks that we are facing in the market right now, obviously we have seen commodity markets all over the show. But I suppose, as much as we breached the psychological level of that 15 handle that you mentioned, I suppose there's a lot of risks on the horizon for the Rand over the next 2 months. I mean, if you think about it, electricity supply issues of late will obviously stifle the much needed growth that we need in this economy. There's also cases of, potentially the fourth wave coming up in December to January. And also we know next week we've got the local elections that are coming up. That's also going to be quite interesting. And leading into that, we've also got the medium-term budget statement on the 11th of November. And then obviously after that, we've even got the Reserve Bank decision and also the ratings agencies also into the latter part of the year as we close off 2021. So it just shows you that there's quite a lot of risks. That's just on the local front. I'm not even touching on the global front, just, with regards to COVID-19 and obviously the global energy crunch that we're facing and all the uncertainty that we are facing. That's also another key issue. And obviously what the Federal Reserve is also going to do next month, and whether they're going to indicate whether they're going to be increasing interest rates and what they're going to be doing in terms of quantitative easing. So it just shows you there's quite a lot of factors that are going to affect us over the next 2 months as we close off the year. But also when you just look at the year-to-date performance for the Rand, we have lost about 3% just for this past year. But nonetheless, I think as a bank, we've said our year-end forecast, we've adjusted it slowly to around 1480. Previously, we'd forecast that we'd close off the year at 1430. But I think the main reason for this, as I alluded to earlier, is obviously the current risk-off environment that we are facing. We anticipate that the volatility will continue up until the end of this year and likely extend into the first quarter of next year. And, the longer-term forecast for ourselves is that we remain largely unchanged. I think we have said that we will trade towards the 1520 level in the second half of next year. So that is, I think, just in a nutshell, just a summary of how the Rand is performing and obviously the factors that are affecting us.
Let's take a look at recruitment company Adcore. They posted a 5.4% drop in their half-year revenue. What is the outlook for this company that seems to be reducing debt, but revenues still keep declining?
Tommy, it's the age-old story of what a lot of companies are facing. I mean, besides some of the mining houses that have released great results, but I suppose that you just look at Adcore, they've released, I think, improved results on continuing operations for the past 6 months that ended 31st of August. They have said that they have improved their operating profit on continuing operations, but also, just like any other company, COVID-19 has continued to weigh on their clients, both in South Africa and in Australia, where they've got operations. But, the nice thing that they came out with a statement is that they're really improving the quality of their revenue, they're raising their gross margins, and obviously, just like a lot of companies, ongoing tight cost control. What we did see from their results, that their training element, that performed really strongly, with revenue up around 41% compared to the prior period. Additionally, both gross profit and margins were also sharply up on the back of, improved training product mix, and obviously they've delivered on their online capabilities as well. And I think what they're also explaining is the fact that despite the softening Australia economic outlook and the muted recovery that we've seen in South Africa, the group's progress is obviously increasing and improving the quality of sustainability in their earnings. So I think on the back of that, even their board actually decided that there will be no dividend, as they actually remain prudent on making sure that they've got enough working capital in their ammunition in their back pocket.
Now, Sibanye-Stillwater has now completed its $70 million strategic investment in Ioneer. Talk us through those developments.
What an interesting investment that Sibanye has done. I mean, obviously the placement follows an agreement between Ioneer and Sibanye to establish a JV to develop, the Rhyolite lithium project out in Nevada in the USA. I mean, it's quite interesting that Sibanye is one of, another South African company that's venturing out into the U.S. market. If you think about it, you've also got the likes of Sasol that has gone into the Lake Charles market. So, but nonetheless, I think Sibanye has said that they will contribute about $490 million to secure about a 50% interest in Rhyolite Ridge, which is obviously a JV, whilst Ioneer will retain the other 50%. This is a multi-million-dollar cash injection, and I think, it's enough to cover the project's equity funding requirement. And obviously, whilst the JV team will work together to secure more debt funding in the future. And I mean, it's quite interesting that the latest $70 million equity placement is obviously Sibanye agreeing to obviously put in more funding into this investment. And I think the nice thing about this whole deal is that it's going to go a really long way in what is expected to be one of the first major lithium suppliers in the U.S. market. And I think this is, coming to at a point in time where 18 months ago, Ioneer had described the deal with Sibanye as obviously the culmination of an 18-month process to find a strategic partner. And I think Neil Furman and the team at Sibanye are really doing well. I mean, they have also acquired Stillwater out in the U.S. So it just shows you that, they are really expanding their horizons, and that could just mean even more revenue for their balance sheet.
Now, Stats SA has just released the producer price index for September. What does the data look like?
So it's quite interesting. I mean, this numbers obviously will give further clues about whether price pressures are building, and I suppose this is also going to feed through into what Lesetja Kganyago and team at the Reserve Bank are thinking. I mean, higher producer prices obviously will translate into higher consumer prices further down the line. And obviously, don't forget that even with the recent petrol price increases on the back of the oil price and the weakening rand, that's unfortunately going to obviously factor through into the inflation number. And I think we all know that the Reserve Bank obviously targets CPI between 3 and 6%, with annual CPI rising about 5%. So the Reserve Bank has lagged other emerging market central banks in terms of increasing interest rates, but they have said that they are ready to act if there's a risk that the rising inflation becomes a permanent issue instead of it just being transitory. So I think on the back of that, we are going to be really quite interesting to see what Lesetja Kganyago and team do, especially with all this data that has come out earlier today.
Now, talk us through this. Take-home pay records the fastest increase in September 2021. Talk us through that data as well as the variables that have influenced that.
So it's quite interesting. I suppose when you just look at what Bankserve Africa has said in terms of their index, I mean, they have said that we have reflected the fastest growth on record as the average take-home pay has increased. It's increased about 13.5% in September this year. But I think we all know that this momentum is likely to be really short-lived. There's a couple of factors that have really, played into all of this. This was mainly on the back of the salary adjustments that we have seen to civil servants, people like teachers, nurses, etc. And also there was overtime pay for the July unrest. I mean, you remember that during the period in the July unrest, there had to be overtime pay for the likes of the South African Police Service and also the Defence Force as they extended their duty during the unrest. And obviously that added to that number. But also the other factor was the really low take-home base in 2020 last year. I mean, if you think about it, last year, that's when the economy at this point in time in September started to recover. And as a lot of casual workers gradually returned to the workplace and obviously they had been laid off at home for most of the, level 5 lockdowns, etc., and all those restrictions. So on the back of that, obviously, more pay had to come into effect, and obviously this has played into the numbers. But as I said, the momentum is going to be short-lived. I mean, if you're just looking at supply chain issues across the world, and obviously the continuing shocks from the July unrest that we did see, that's obviously going to constrain economic growth, and unfortunately, we're not going to see this repeat itself next year. And I think we can expect a downward adjustment for salaries in the next coming few months.
Mr. Matete Thulare, thank you so much for today's market update. We'll leave it at that for today. He is head of foreign exchange execution at Rand Merchant Bank.